You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it's time to rock out with the Option Block. My name is Mark Longo from the ever-exciting TheOptionsInsider.com, as well as, of course, from the old Options Insider Radio Network. A lot going on here on this Monday, August 5th, a little past noon central, if you're listening to us live. Otherwise, whatever time it is you're listening to us, we welcome you here to the Option Block. We got a lot to get to, a lot of stuff popping off on the show, and joining me to help me digest it all. Let's go around the horn. Let's start off. Let's spin the wheel, and it lands first. Could be in Riverside, could be in a Costco near you. We just don't know. We have to find out. It is the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. Where are you today, sir?
I am at our world headquarters, the co-world headquarters of BigBlondeHair.com, Option Pit, and Carmen Line Capital, located in the heart of the Chicago Financial District. And I am watching a little interesting day in the market. I gotta be honest.
A bit of some stuff to talk about. By the way, one of those things is not like the others that you just mentioned. Which
exactly, no.
Just kind of interesting. I'll leave that up to the imagination of the listeners as we keep on rolling. We keep going further east, all the way to the hottest of hot seats, a.k.a. the Fidelity Hot Seat, where we are joined once again by the last dad of Krypton, Mr. TREY JARRELL from the Fidelity Active Trader Strategy Desk. Trey, welcome back to the program to you as well.
Yeah, thanks. Glad to be back. Always know there's a lot going in the market when I have to fight for the seat on the show. The last emperor was really chomping at the bit today with all the activity, but I was successful. So
you got to watch that guy. He's always angling.
Yeah, I was kind of hoping to see that Diocletian would be on here today.
That last emperor, he's always angling. You got to watch out for that guy. He's always angling for the hot seat. You got to watch him, Trey. Keep one eye on him and one eye on the market, sir, because that guy, you you can't trust anybody named Constantine. I think history has shown us, dubious characters, dubious characters abound. Speaking of dubious characters, I'm not sure if there are any over here, but let's find out anyway. Let's head on over to that idyllic, scenic, tranquil land known as St. Charles, where we are joined by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program to you as well.
Always happy to be here on the 80-point day. Which way, though?
Yes, indeed. All right, let's keep on rolling. Now let's get into it. It's time to kick off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Time for the trading block. And yeah, we got one today. We hooked a big one. Big one to the downside, at least. We were talking on Friday, all this exacerbation of the trade war. How would it play out? We actually broke down some trades on volatility views that seemed like they were wagering on a very, very quick resolution to that trade war. And spoiler alert, that did not come to pass, because here we are on Monday, and the markets have just exacerbated everything to the downside. I guess you can call it today's the day China strikes back in the trade war, letting their currency fall below this much-watched level 7 yuan to the dollar. It's a level everyone out there in that space pretty much has seen as a floor. It hasn't dipped below that since the dark days of the 2008 financial meltdown. So we're having a lot of historic 10-plus year firsts. We, of course, had the first rate cut since those dark days last week, and now first time the yuan has fallen below its traditional floor of 7 to the dollar. Of course, China striking back against some tariffs, saying, oh yeah, well then here you go, some cheap currency for you. That, of course, causing a lot of furor in the FX world, causing a lot of furor across the broad markets as well. Most of the major indices threatening the 3% level to the downside. S&P and Dow off pretty much exactly the same percentage, right around 2.7%. NASDAQ once again leading the charge in the wrong direction, off over 3%, 3.25%. Of course, gold getting a little bit of a bid, up 1.5%, maybe not as much as people wanted, but a decent pop. And crude, once again, feeling the lack of love to the downside, off about half a handle, still right around 55 in that WTI range. And of course, all this blood red on the screen means VIX cash is screaming to the upside. Not only do we see a 20 handle, coming into showtime, we're at a 23 handle right now. So up about over 5 handles just in the last 24 hours or so. But overall, since our last show, up nearly 8 since our last show. So volatility is smoking. Volatility is screaming. Our old friend VVIX. Remember, we just said it not too long ago. VVIX was threatening the 70 handle. When it gets there, you got to start paying attention, because things happen. Maybe not to this extreme, but things tend to happen. And were we right? Perhaps unfortunately, VVIX up to 111 now, up over 20 handles just from our last show. And of course, our old friend VXX unwinding all of that tasty erosion up to about 27.5, up about 5 handles from where it was this time just last show. So all of you out there keep saying, I don't need to protect my VXX for some upside moves. These are the times when maybe you need to reconsider such things. Let's go back around the horn the way we came. Let's start with Uncle Mike. Let's go backwards, actually. Uncle Mike, sir, what is cooking in this, I'd imagine, very low BBI day for you, sir?
Yeah. Well, I mean, with this, I kind of lucked out in a couple ways. In my risk reversal strategy, I turned it into a call spread last week. So in that sense, I'm sitting on a lot of cash. I had to roll down a put spread last week, but I'm still not at where I rolled it down to yet. So I'm still out of the money in that fashion. So in that sense, it's kind of worked out. In terms of what's lighting up my tape with everything that we have going on today, I mean, it's like you said, this is really all about the China war right now. What's surprising me, though, is that we're not getting more of a bid in the precious metals with the fear of it. It kind of makes me think that perhaps that we got a little bit of a buy the rumor, sell the news type of thing with the run-up that we had a couple of weeks ago, and that the market may have known beforehand, or at least the metal market may have known beforehand, that some of this may have been going to happen. Of course, you never know of things like that. But with this, ultimately, this is come to the point to where are the insiders going to be buying anytime soon? And if they are, the chief insider of them all, perhaps maybe Mr. President, is going to magically say that the trade war is going a little bit better now, and then maybe the market's going to come back. The Trump trade, at least from what it seems like to me the last 3 years, has been something bad happens, market dips, you buy it, and then when it dips after you buy it, a lot of times something good's going to happen. Magically, the trade war is better, and then are progressing, and then things get better. So we'll see if that holds true this time. The only time that there's really been that much of an exception to what I had said was last November and December. So we'll see if we have a market like last November or December, or whether magically things are going to get better in the trade war. Time will tell.
No, it's funny you should mention that, because that was kind of my first blush, too. I saw all this red on the screen, and I thought, oh, well, we're going to be getting a decent pop in gold, and yet not so much. I guess I've been talking to you too much, Uncle Mike. My thoughts go to the metals now.
There you go.
You're totally to blame for all of that, sir. Let's continue back around our course. Mr. Trey, sir, I got to imagine today a bit of a busy day over there in Fidelity Land. Folks lighting it up, trading hot and heavy. What is dominating the tape over there in Fidelity Land today, sir?
Yeah, you're absolutely right. Very busy day from Fidelity customers. Lots of trades rolling through here, to say the least. So, a few of the kind of our perennial, names in the top, as usual, are Apple, Amazon's, Microsoft, AMD, all popping up there. Today, a little bit of a different flavor. We're starting to see a little bit more of the ETFs coming into play. SPY and IVV, both in our top 10. So usually these are on the list, but maybe not both in the top 10. What I thought was kind of interesting, Fidelity customers kind of taking the opposite approach of the market and on both SPY and IVV. Buys actually leading the way. So we have 63% buys on SPY, about 83% buys versus 17% sells on IVV. And as we go through a lot of these big names, it seems to be the pattern, right? Our Apple, Amazon, Microsoft, all kind of leaning on that buy side here from the Fidelity customers. So, a couple of things on the topic of the S&P. I wanted to take just a quick moment and look at a couple of the technical levels on here. And it was a little bit more interesting this morning. Found a couple of points that look like they might be relevant here today. And S&P's slowly been blowing through them. The first was, one of the things we'll look at often is trend lines. We had this kind of interesting trend line we drew from the bottom of the December 2018 lows at Christmas Eve, connecting in the May lows. And we were actually approaching that trend line here today, right around 2880, and seems to be a level that has market quick push through here as well. Kind of the other interesting support level would have been this 2850, 2860 range where we're in right now. This was a level looking back, all the way back to January 2018, where the S&P, when it hit the high there for the first time, was level we reversed off of on it here as well. So it actually came back into play as an important resistance level in August of 18, held support in September 7th of 2018, support in October here of 18. Resistance here in March, and approaching and sitting at that level here right now. So it's a level we've seen a lot of reversals off here in the past. Not sure if we're seeing that evidence here, but just sitting at that point right now. One area that we'll be paying attention to throughout the day. And of course, below this, right, failing to hold it. That 2800 level starts to look like it may be coming into play, only 55 points away right now, which is right about where we see our 200-day moving average here, which is at 2790. So, if we continue to push down, those might be kind of the next area that we'll be paying attention to see if we get some traction here there as well. So, two other quick names I wanted to talk about too. These ones, a couple of companies that don't always pop up onto our list on it here, but two companies that had earnings last week that are really taking a bigger dip here today. The first was Square here, ticker SQ, reported on Thursday here as well. Disappointing earnings outlook, and we saw the sell-off. Stock was trading right about 82.50 range here on the day before earnings. Dropped down right below its 200-day moving average, right below 70, and today sitting at 64.27, down another 5 points here on the day. So from a technical standpoint, beginning to look a little bit ugly. We have some recent lows right around this 62.50 level here back in May. Maybe some interesting points to take a look at. Fidelity customers are on the buy side of this here as well. It doesn't look like the option market's disagreeing. We do see a little more calls than puts today, but most of the action on the call side is leaning toward the sellers right now. About 14,000 versus 12,000 call buyers here as well. The other thing I thought was interesting on Square, we spend so much time talking about that implied volatility crush after earnings. They had a little bit of a bounce at first, but implied volatility 30 levels actually higher now and continuing to increase with this sell-off. Implied volatility right about 48 here on Square. A week ago it was at 43, so just one of those interesting scenarios where, we see the big drop, so much so that we're getting that IV increase after the earnings versus the decrease here as well. And, one other one here from the Fidelity customers that didn't pop up too often here was Twilio, TWLO, down about 7% here today right now. Fidelity customers actually buying here today as well. Got about 68% buys versus 32% sells, but similar story. Had earnings last week. Earnings didn't seem that bad. Actually met analyst expectations for earnings per share. However, seemed to be bad timing here overall. Broke through its 50-day moving average here right at the earnings, right sitting at 125 right now. This is a stock that really has been in this really strong uptrend here since the beginning of 2018. It's this really steady climb. So big drawback on that here today. Sitting again at 124, but still about 10 points above that 200-day moving average. So thought it was worth to mention. One that doesn't come up too often, but was on the Fidelity customer's radar here today. But that's what we had today and what I was taking a look at.
Thank you for that, sir. All right, let's keep on rolling. Let's go on out to the land of all those, the headquarters of all those many disparate companies. Mr. Meatball, what is on your radar in this comparatively active day, sir?
Yeah, well, trending is Stasi Schroeder's shirt that she was wearing when she got engaged last week. That's what's trending. Oh, you meant like the market's not what's selling on Big Blonde Hair.
Oh, yes. I'm sorry. That's a different show. That's our after-hours show. Okay.
But I thought that was kind of – she's shaking her head at me, by the way, Mark. So, I got to say VIX kind of popped right out the gate and then really has been kind of mellow. I mean, it's up $5, but it's not – we're not seeing kind of the Chinapolis – China apocalypse that everybody was talking about. This has been a controlled sell-off. We opened down about 50 and have just kind of meandered our way lower. The VIX is now, gotten over 23. Looks like it might want to make a run at 25, 26 before it's all said and done. But, we could see – don't be surprised if we see some sort of turnaround. We could see a Fed governor talking. I don't know that we're going to see a lot out of the Trump administration here. I don't see that coming. But I think that you could see, us maybe kiss 2,800, 2,795, which is the 200-day moving average, and then maybe find some support or some assumption that the Fed's going to talk. But what we've seen the last couple of days was your very classic. Thursday bad, Friday bad, Monday really, really, really bad. And then typically this tends to be one of the days that could be kind of a peak in volatility. But I will say all of my hedging programs are screaming green right now to be long vol. And we are going along with it. So we began buying volatility on Thursday and got pretty much a full hedge on by the end of the day Thursday because of how quickly VIX and the VIX complex moved. And we're now in a full-on backwardation. August is above SEP, SEP above AK above NOV, NOV above DEES. That's pretty much cut and dry backwardation and a sign that, now that stocks are likely to underperform at least for the next few days.
Underperforming from a downside perspective, certainly not from a volume perspective. The numbers coming into the Showtime are just off the charts here. I mean, come into Showtime here. So these are even stronger now that we saw the VIX already north of 1.1 million contracts. ADV already a seasonally impressive 562,000. That's up about 150,000 from what it was about a week and a half ago already, that ADV listeners, and they've already pretty much almost doubled that. So not a bad run here, and I'm sure more is to come before all is said and done today. SPY at about 2.5 million. That's again north of their ADV of about 2.35 million. SPX over a million already. ADV about 1.2 million. The Q 760,000. The ADV just around 600K, and the Russell, aka IWM, 412,000 around the tape. Coming into showtime, 366 is the ADV out there. By the way, if you're wondering on the index front, how does it all break down? Right now, I saw an interesting nugget coming across our radar here. In the S&P 500, so obviously 500 names, only 20 stocks are up as of right now in the S&P 500. So if you're mathematically challenged, 480 stocks are in decline right now. If you're wondering, the biggest winner so far, Tyson Foods, up nearly 7% in the midst of this maelstrom. So imagine how much they would be up if the rest of the world wasn't on fire right now. I don't think everyone's really looking for processed chicken as a way to ease the massive sell-off here. Let's see what's trading in the individual equity options land. Number 10 here on our top 10. Go to Amazon, $1.14 on the tape. These are coming into showtime. Number 9, Tesla, $1.22 on the tape. Number 8, Micron, $1.24 coming into showtime. Number 7, good old Netflix, $1.26. Number 5, Baba, 142,000. This is decent paper, but not actually as explosive as you might expect. Number 5, Microsoft, 151,000. Hot off the heels of the rumor they spent $50 million to lure a streamer over to their new digital streaming platform. So maybe that's why they're only up that much. Number 4, Facebook, 202,000 on the tape. Number 3, Bank of America, 216,000. Numero dos here. AMD, once again, kind of a perennial number 2 on our list here these days. 267,000. And number 1 with a bullet, with an exclamation point, 514,000 contracts for Apple. Surprisingly enough, exactly even, 50% calls, 50% puts. Apple off nearly 8 handles, 760 or so, nearly 4% on today's action. That's the first time. That's the first one we see. Actually, no, I take that back. Micron's 51.49. A lot of very evenly split. Baba also 51% to 49. So a lot of evenly split between calls and puts, which is surprising given the dramatically one-sided nature of the underlying flow we're seeing today. The biggest, most biased paper we're seeing right now is actually looks like it's Facebook with 65% of the flow to the calls. Which is interesting. Let's hit a little earnings. Of course, we do have a bunch popping off this week. We've got Marriott, Shake Shack today. Tomorrow, the company that owns all media and entertainment. They'll probably be buying us any day now. This is, of course, Walt Disney coming up on Tuesday. Wynn as well. Wynn having a rough day today. Wynn's one of the leading decliners, off nearly 7%. So they're leading the charge to the downside ahead of their earnings tomorrow. So can't imagine that's good news for them. CVS on Wednesday. Lumber Liquidators, Lyft, Roku on Wednesday. Thursday, the much-watched Uber. So Uber and Lyft, those two big names popping off this week. Spoiler alert, they're going to lose money. It's a question of how much. Thursday, also Activision, Blizzard. Those names, gaming names, coming under a lot of heat today, too. A lot of the politicians trying to turn the heat for the recent mass shootings away from gun control towards violent video games. So those names coming under fire over there as well. And all this churn and burn has made the options market at least have a smiley face. The numbers are in for July. July volume up nearly 8%. If you pay attention, you know July, historically not exactly a rock'em sock'em robots month for the market. This was the highest volume total for July ever in the history of the options world. Let's see what the numbers were. Total of 403.4 million contracts. That's again up nearly 8% from last year. Let's see, ADV, for this is total OCC volume now, is about 19.3 million contracts. That's still down almost 6%, so nice July, but not enough to turn the tide. Let's drill down a little bit further. Exchange-listed options volume, 396.8 million contracts. That's up exactly 8%. Let's drill down a little further. Equity options up, let's see, 357.6 million. They are up 7.3%. The cleared ETF options, 128.7 million. That's up a paltry 2%. Index options up 14.1%, 39.2 million contracts. And let's see, futures also, interestingly enough, because that's pretty much mostly VIX, up 3.5%. So that's, if you've been watching, that's been a dark spot for a while, too. They've been kind of annihilated post-VIX-ocalypse. And these days, at least, looking pretty good. Meanwhile, talking before about those gaming stocks under fire. I mentioned Activision Blizzard. They're off about 5.5% right now. Take-Two off 5%. Zynga, our old friend Zynga. Where's our friend Mr. Grigas? And Rockops used to love Zynga too. Down 3.8%. GameStop off nearly 4%. And EA, the publisher, off 3.6%. So a lot of them feeling the downside today. Let's see what our audience and the market is feeling as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Time for the Odd Block. And we are seeing a lot of crazy moves in the market right now, and that coincides with a lot of crazy, very short-term trades we've been highlighting lately on the Odd Block in the last few weeks. So I thought we'd come back and check in how some of these trades in the weeklies and very short duration ones that we talked about for size, let's see how they panned out. Let's start here. Let's kick it off here. Pulte Group, our old friend Pulte Group. This is a construction company. We talked about them last on the show a few weeks ago, July 22nd. At the time, July 22nd. So the stock was at 33.48. At the time, we saw a 10,000 lot going up that day of the AUG 35 calls. These were weeklies. They were expiring August 2nd. So they're already gone, listeners. And these were opening, kind of lifting the offer there on the Philly 10,000 times. Pre-earnings, earnings were immediately after this trade. So this trade went up, and then the next day before the open, before the bell, the earnings were announced. So this was pretty much a binary swing for the fences. These calls are going to look good, or they were not. And let's look here. Oh, I think the stock chart will tell us all we need to know about this one, listeners, because it closed at about 33.5. On the 22nd, the day this trade went up. The next morning before the bell, it was at about $30.70. So kind of went in the wrong direction for this guy here because, yeah, that's not exactly a good move for these calls. I'm going to guess these calls, he could have bought all he wanted more the next morning for not too much money at all. So, yeah, that's exactly. And by the second, let's see how high they got to the second. Stock closed at 31.34. There was a brief dalliance. The highest it got was 32.10 again, so it did rally about $1 and change from that low there after the earnings, but not enough to make a market difference here on these bad boys. Yeah, spoiler alert, Mr. Meatball, these calls still open on expiration. They kind of went out worthless. So it looks like we got our friend here. He threw away 45 cents 10,000 times, sir. That'll leave a mark. Is that your take as well?
Yes, I think that's correct. This did not work in this gentleman's favor, and what are you going to do? So sometimes you get the bear, sometimes the bear gets you. In this case, the bear got him.
This guy provoked the bear with his weekly trade going into earnings, and the bear got him. Yeah, that's why we say, listeners, the size money, not always the smart money. This guy, you could have put that money to many, many more uses. And obviously, he could have had something against it. He could have been short size, and he could be happy. And this could have been just a hedge against short. I understand all of that. We're just looking at the options component. That's probably an unlikely scenario, but it is possible. So we should put that caveat out there. But still, on the pure option side of it, non es bueno here. Let's keep on rolling here. A few days earlier, we saw, looks like a put palooza in, what do we have here? This is Skechers. This is Skechers, our old friend Skechers. This is from the 18th of July. We saw some put love. Skechers, of course, ticker symbol SKX. Trading today, 33.25, off nearly 170, nearly 5%. So not a good day for Skechers. At the time this trade went up on the 18th, almost $35, 34.84 is where it closed on the 18th. And what we saw, these were fairly out of the money. At the time, we saw about 4,000 of the July 30.5 puts. And these were opening. And that's another interesting one, because this is effectively a daily binary play because they had a day to go. 4,000 of the July 30.5 puts for a whopping 90 cents. 90 cents on the offer. So lifting the offer here. Let's get that. So yeah, the stock was about 34.5. They had earnings that night though. They had earnings that night right before expiration. So that's going to put a little bit of juice in them their puts. And our friend here paid it. It was 60 cents at 90. He bought it all 4,000 times pretty much opening. So interesting. Let's see how it worked out. The stock turned to the dark side there immediately after this trade. Let's see. This was the 18th. So, but you only had a day to go, listeners. And actually, so I take that back. It turned to the dark side about a week and change later. Immediately, in the immediate blush after earnings, this stock went the wrong direction as well. The next day, the 19th, it was trading 39.01. So up, about 4.5 handles from where it was. So another guy, wow, we're 0 for 2 here. Another guy leaving a lot on the table. He traded less size than our friend, but he paid about twice as much. So it kind of works out to about the same. Oh, wow. So yeah, this is another guy leaving a lot of money on the table. 90 cents, 4,000 times for effectively a daily swing at the bat, listeners. Again, there are other caveats, other things could be at play here, but just on the option side alone. Again, Mr. Meatball, maybe these guys should be taking some of your hedging or perhaps avoiding hedging around earnings webinars. What do you think?
Yeah, I mean, I think this pretty much had to have been somebody that was looking for a big move, wasn't sure which direction, but they wanted a hedged stock. I think I'm going to guess that even though it wasn't traded with stock, there's some sort of big stock position involved in the discussion of this position. I'm not so sure it was just a straight up put purchase. That's my guess.
Yeah, it would be strange. Obviously, if he did it, it could be 1-to-1, could be delta neutral. If he did it tied to stock, I'm looking here. We didn't see any signs of a block when it went up. But again, you never know. They weren't the highest delta, so delta neutral, you're not getting a lot of shares for that. Maybe he did it 1-to-1. That'd be a different story. So yeah, there are other caveats, other potential legs here, listeners. We're just looking at the options side. And if you're looking at it through that purely stark, unforgiving gaze, we are indeed 0 for 2 here. Let's see if we can wrap it up. Look, ironically, we're just talking about it in the top 10. It's an active day out there. The indexes are lighting. I think a day like today, everyone's kind of flying to the indices and unwinding and adjusting. It's not a ton of paper, actually, lighting it up in the individual equity options. Some of the biggest prints we're finding today are like 2,000-3,000 contracts on a day when everything is on. You heard the numbers we just said, going to the top 10, 120, 130,000 on a day when the indexes have already done their ADV and then some. So not exactly the rock'em sock'em robots day you'd expect in the individual equities, but again, everything's kind of linked to the indexes. Everything's passive these days anyway, so in these kind of days, everyone's rolling and unwinding and adjusting out there, maybe to the denigration here of the individual equities. Because, yeah, one of the more interesting prints we saw today was a 2,000 lot in advanced auto parts. This is AAP. Let's see, trading today 140.70, off about $5 or about 3.5%. Obviously, an auto parts manufacturer. A year ago, they were trading 145. It's not that far south, or I should say north of where they are right now. They rallied over the course of the year to November to 184. So they had a nice 40 handle run. Then they kind of sold off again down to back to pretty much unched down to like about 145 or so, and then back up to 180 and change back in April. So it's kind of been peaks and troughs, and pretty aggressive one, 35, 40-point swings over the course of a span of a few months. So a little more volatile than you might expect for an auto parts manufacturer and distributor. Let's see, the 52-week low is actually a little bit shy of 140, 139.96, and the high is about 186.15. All that brings us to today, where we're pretty much right at the lower end. Actually, we are right around the lower end of that range. We're a couple of cents away from that 52-week low. What do we see? The big whopping trade today, 2,234 of the advanced auto parts, AUG 145 calls for 490. Again, these are kind of rich, but it is worth noting that they still have earnings coming up, so this is an earnings play, so you get some earnings premium. And also, as I just illuminated, for an auto parts maker, this thing freaking moves. It moves more than you would expect for a staid name like this here. So picking up these calls, let's see, 490. This is a pretty wide market as you might expect. Looks like they're probably buying these bad boys. They were offered at 420. They got a decent little clip in the middle here. But again, 2,200 is a pretty big print for this name, so you expect some facilitation there. Mr. Meatball, what do you think? Think this is earnings upside love? You think there's something else afoot here? You think maybe they're actually selling these bad boys to harvest some of that surprising amount of juice here in AAP? What's your take on our final victim in the odd block, sir?
Yeah, these auto parts dealers tend to move. It's really, people don't realize it's one of the more volatile spaces. I mean,
yeah, this is like a biotech stock here. This is crazy.
You look at AZO, AAP, O'Reilly. They all moved. But I mean, pull up the vol chart on AZO. There's another one. These things fly around. I don't know why, but they are. I think it maybe because they're lightly the float is low. It pushes these things around. But yeah, I mean, you're talking 63 vol with earnings coming up. I would venture to say that these were buyers would be my gut. Obviously, I don't know for sure, but it appears to be a buyer just based on the way the flow worked out.
Yeah, maybe we need to add a new category. We always joke about biotechs and pharmas and tech, but maybe we need to add auto parts distributors to that list. This chart,
it is nuts.
This chart looks like, if I just looked at it and without a legend, I would think it was a biotech or something. It's all over the place, and it's just a auto parts distributor. So yeah, 40 handle swings over the span of a couple of, maybe, I'm looking at AutoZone now. You're right, they kind of move a bit too. Yeah, maybe we need to add a new category of the volatility you didn't know about, aka auto. I know there's been some recalls out there and things, but still, that enough to drive all this? Apparently it is. Well, maybe we'll have to dig into that sector a little bit more. And meanwhile, speaking of some digging, it's time to see what Uncle Mike has dug up for us, because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Uncle Mike's talking about BS. I'm just kidding. I like to make fun of his typos sometimes. Uncle Mike, of course, it is time for him to hold court on all sorts of fun stuff. Uncle Mike, it's kind of a tumultuous day. People, they need some knowledge. They need some reassurance. They need to know all is right with the world. And maybe they need to learn a way that they can go about doing that. In this kind of environment, things are slipping around, slinging all over the place. People might say, hey, I want to trade naked. I want to go crazy. I want to go hardcore. Maybe that's too scary. Maybe they want to go the more risk mitigated, maybe perhaps the more nuanced approach of verticals. Maybe that would be a good subject for today. I'm just saying. Or maybe you want to go straight up BS. What's your call, sir?
One of them, yeah. You can tell there's been some typos in the auto correct or in our chat between us. So what I want to talk about today is that I remember way back when I first started trading, I'm thinking, what would be better? Should I get a $1 credit for trading a vertical, or I could go further out of the money and maybe leverage myself and get that same $1 credit by being naked? And so I remember debating on it for quite a while, actually, but eventually, most of the time, I typically don't trade naked, and days like today are the reason why for it. Now, let's talk about trading a naked option. Let's say that I'm going to sell a put, and I'm going to leverage myself maybe 2 to 1. So let's say XYZ stock is at 20, and I'm going to sell the 20 put, and I have $10 in my account. So I'm getting 2 to 1 leverage for doing that. You can go even more aggressive if you want to, but let's say that's what I'm doing on it. Well, if the stock stays above your strike price, you're fine. But the second it touches your strike price and goes in the money, you're basically owning stock on 50% margin, or you have that same risk. Now, the reason that a lot of people don't like verticals is because they feel, and they're correct in this assumption, that you are selling an option with lower volatility and buying an option with higher volatility a lot of times. So in other words, let's say XYZ stock's trading at $55 per share, and you want to sell the 50-45 put spread. And by doing that, the vol typically on the 45 put is going to be higher than the vol on the 50 put. Now, granted, you're still getting a credit out of it. Now, by credit, I don't mean it's automatic free money income, no. But what the gripe is that oftentimes is that you're paying more than what you should by buying that 45 put. So you know what? I'm just going to trade naked and then manage my risk another way and leverage myself and then just get out of it if it goes against me. Well, you get days like today. Most of the time when you're doing some type of a premium selling strategy, it works until it doesn't work. We've I think we even said it last week for that matter. And so when doing so, one of the advantages that I like about a vertical is that on a day like today, the vol actually runs higher on the long leg of a put spread than the short leg of a put spread, meaning that when we have the traditional inverse vol market reaction to where the market goes down, vol comes up, the option that is further out of the money, in this example, it would be the 45 put, the vol would go up faster than the 50 put. Now, granted, it's still going to be a losing trade 99.9% of the time, unless you have some type of mispricing of some sort. And so you're still going to lose money on it. But the point is that because that option that you paid more for the vol, because it is more sensitive to a vol move, because it's a little bit further out of the money, so typically that option is going to move up higher and faster due to the vol movement, it's not going to bite as bad when you're wrong. Once again, I said that when you're wrong, you're going to be wrong at times. So where I'm going with this is that one of the things about a vertical is that you have the advantage of the long leg. Now, oftentimes people hate paying for it because if the market goes higher, you see your short leg making money and your long leg losing money. I hate these darn hedges. I wish it was just like futures to where I could just sell a naked put and just do that and just be levered and I'd make so much more money. Well, yeah, that's true if you're right. But if you're wrong, especially on a day like today, not only you don't have the hedge in place, so if the market goes to zero, then you have that hedge in place, but also you have that vol working for you to the downside when it goes against you. And that's something that's oftentimes overlooked when taking a look at put spreads. Now, the other thing with which to consider on such a thing is the fact that when you're selling a naked vertical, when you're selling a vertical, you have limited risk. So you can actually be at a point to where, let's say that you're way wrong and the company you're selling this vertical put spread on goes belly up, you know that you can only lose a certain amount. Let's say it just gaps down overnight, like, well, the S&P did over the weekend. You know that, yes, you're going to lose everything on the spread, but you know that you're not going to lose more than what you actually have, which you would if you are naked short a put. Now, with that, don't get me wrong, I have some short puts going on right now. I mean, they're not levered. I never really do anything with leverage on naked options. I do cash secured short puts, but typically never levered short puts. Understand that managing the risk and when you're wrong and surviving on days when the market doesn't go your way, that's how you stay at this for many years. It's not about the big one that you make and then you retire after 2 months. It's about staying at this for a long time by trading smart and mitigating your risk in the best possible way. And that is what I have to say today about the vertical spread.
Thank you for that, Uncle Mike. All right, let's keep on rolling, see if we can get some of you on here on this crazy, tumultuous day as we keep on rolling into the mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is where you guys take the reins, questions, comments, like people chiming in here during the show. Scott, longtime listener here, Scott Sommer, he wanted to remind us to be aware that if the SPX touches 2726.80 before 2:25 p.m. Central today, there'll be 15-minute market-wide trading halt. He wanted to just let everyone aware of that. As right now, we're at about 28.5. So I think we're safe for now, Scott, but thanks for the update to make everyone aware out there what's going on. Trey, I know your phones are lighting it up out there right now. What are the Fidelity masses? What are they hitting you up about on a crazy downside day like today, sir?
Yeah, a couple of interesting ones here today. Hedging conversations tend to come up quite a bit for us today. Had an interesting question, here today though around exit strategy. Came through this morning. Client wanted to know, how we make decisions on when to get out of kind of the bullish options strategies when the market is beginning to do the opposite, right? Show us some signs of that downward movement here. And, one of the things that, we always like to really go into detail is, these are the types of things that, should definitely be thought of beforehand, right? Whenever you're putting on any given option strategy or any position at all, right? Have an idea in place of your exit to the downside. And I think with options, what really becomes important is starting to think about some stress tests on the way down. So we talk a lot about technical levels here, and and these can be very important, right? When we're looking at this point, I talked about on the S&P this 2850, 2860 range. Right, if we were planning out a bullish strategy, we saw that this might be a potential level that it could pull back to. We should be running these numbers ahead of time, right? Putting our options in a profit loss calculator. Hey, if we get this type of 5% dip, what does my option look like, right? Based on that decreasing value, likely going to get a spike in vol. Where does that actually look at from a portfolio total standpoint? But then also start to think of, hey, if things do recover. We do get a bounce back. How does this look after time decay is eroded out, after vol has started to come back down here as well? Really think that, starting to plan through these things ahead of time are going to be a big helpful point here for you. And try to use things like the charts and these levels to your advantage to help identify, some of those potential points. Here and, valuing what your options are going to be worth in those types of environments. But it's really been a big topic for us here today, just, starting how to think about managing some of our positions in the wake of that downward move.
Yeah, I could imagine that the phones on a day like today are lighting it up, and not a lot of people saying, hey, how do I buy a call? It's kind of the opposite. These are the days when people remember, what is that hedging thing, you guys? How do I do that? Unfortunately, the horse has kind of left the barn today, but for future days like this, it's worth noting. Uncle Mike just talked about it. Trey just talked about it. Different ways you guys can use the old options. Those technical points, we often joke about technical analysis here on the network, but that is where a lot of the orders, as we look at the book, that's where those orders line up. So it is worth knowing at the very least those levels so you can know how to structure your trades accordingly. All right, let's see. We got a bunch of questions. A lot of them are a little bit, not much time left for the questions. Let's see if I can find a quick one. A lot of these are pretty epic. So this guy's got an off-topic question for a slow market day. Unfortunately, that's not today. All right, yeah, let's keep on rolling. These are epic. Maybe we'll devote these on the strategy block or a mail block on Thursday. Meanwhile, let's keep on rolling and let's go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. You know them, you love them. It is earnings season. I know macro is wiping everything off the board right now, but it is earnings season. We kind of mentioned at the top of the show, a lot of big names popping off. Tomorrow we got Blue Apron. A lot of you guys like that. Shake Shack after the bell. Today, we just got a brand new earnings reports there. You can check these out for yourself. TheOptionsInsider.com. In fact, if you're listening live, you get a little bit of a sneak preview because this report will go live after the bell today on the website. You get to hear it now. And let's see, breaking again, courtesy of our friends over there at ORATS, ORATS. Check them out for all these good reports and data. Giving you all this good earnings data completely for free. That's just how nice they are. Some big names popping off that are included in this report. We got Disney. Coming out, they are, of course, after the bell tomorrow. They are priced, at the time of this report, they were at $141.71. They're a little bit off that right now. They're off about $3. They're right around $139 or so right now after today's sell-off. They were pricing in, $444 on that straddle. So they kind of tweaked the reports again, going back to showing how much the dollar value of the straddle actually is. The past earnings moves were $2.50. So that's actually pretty rich for Disney. They're pricing in a decent premium here. Let's see if that is merited. Coming up really quickly. Let's see, I'll hit on a couple others here. Let's go. CVS also reporting. Don't talk about the drug makers that often, or the drug stores, I should say. 55.71 come into report time. They were pricing in nearly $3 as well. That's also pretty rich for a $55 name, and that's actually kind of a little bit more than they've done recently, but not a ton. Their past earnings moves are about $2.62 or so, so a little bit rich on that level as well. Lyft, a name a lot of you guys are watching, 58.61 coming into report time. They're pricing in $5.79. Not a huge record on the earnings past move front, but they have moved. The last one was 635, actually. This is actually a little bit less than previous, but again, it's kind of hard to look into the past with a name like Lyft. Doesn't have a lot under its belt. Uber, same deal. 40.5 going into this report. They're pricing in 2.25, and their past move was a whopping 62 cents. So, again, bear that in mind here. The data on Uber and Lyft it's not exactly far-reaching out there. Let's see. Any others really quickly? Uber and Lyft, those are some of the big ones. I know you guys are. Oh, our old friend Paz. We were just talking about them. 1610, they're popping off after the bell tomorrow, 2 days from now, Wednesday. And Henry and this Flowmaster, loving some call action in them recently. They're pricing in $1.05 for their straddle, which for a $16 name is rich. Remember talking about those calls being kind of juicy. And they moved exactly 106 before. So maybe something to be lurking out there in the land of silver. Let's go back around the horn and see what everyone else is watching. Let's start in the land of the meatball. Mr. Meatball, sir, what are you watching for the rest of this week until we gather together again on Thursday?
I'm going to watch the market drop 3% and see where the VIX goes.
I thought you were watching that girl's sweater you were talking about.
Stassi Schroeder. At 1, I'm going to be watching The Real Housewives of New York. I think it's what's Real Housewives? What's tomorrow? Tuesday? Oh, it's Orange County. Oh, Real Housewives of Orange County is back. It's one of my favorite. I want to see what happens with Tamara Barney.
Yes.
Or Tamara Judge now, excuse me.
All the best of the housewives on that one.
Yes, I'm a big housewife fan. And but really, I think the markets, you got to wonder how long this panic is going to last, and because this is all reactionary selling, that I don't know is really that fundamentally based. And so your question is, how long do these things drop? Does Apple really belong back down $12 after reporting killer earnings, less than a week ago? And so that's your kind of main question is how long can this stuff go on? And the 200-day moving average for the SPX is right around 27.95. And so actually it's 27.80. It's 27.89 is the 200-day moving average. So we're already blown through the 50-day. So now the question is are we going to make it a run at that 200? And the answer is we might. So that's what I think is kind of interesting to me.
You know where you want to be for the flight to quality today. Clearly crypto. Everything else selling off like mad. Crypto, Bitcoin up 8% today. Threatening the 12,000 level. If you like that, we'll get to more of that in about an hour. Some fun special guests here in the studio. But let's keep on rolling around the horn. Mr. Uncle Mike, sir, in addition to all your size crypto holdings, what are you watching for the rest of the week, sir?
Well, I mean, just watching the market drop, as Mark says, seeing if 2,800 does become a level of support for us, a key number. And then if we're going to go up again, 3,000 was definitely a stopping point for the market. So watching that. And then I do got to get scooting. So if anyone wants to learn more about what we do and anything we do, stcharleswealth.com. It's been fun, boys. I will see you on Thursday.
There you go. Uncle Mike, the BBI is calling. The man's got to run. And Mr. Trey, last but not least, sir, what are you watching for the rest of this week?
Yeah, like these guys, keeping an eye on the S&P 500. That 200-day moving average certainly looking to be an interesting point here as well. As you mentioned, Disney here, certainly one that comes up quite a bit in our conversations. Here, definitely keeping an eye on that. I thought that was interesting that stock just breaking below the 50-day. Today, a level that it's managed to hold for really since that big gap up in here in March when it took it above it. So we'll be keeping an eye on that level here as well. The last one too, from an earnings standpoint, keeping an eye on Roku here this week. So stock that's had a big run up here since December. Right, December lows was around $27 up at 100 right now. That's actually pulled back the last couple of weeks from 112, holding its 50-day moving average here as well. Option market, for this week, pricing in a little over a $17 move on this one here with earnings here on the night. So be interesting to see how that one plays out. See what this what this move brings for us. And finally, keeping an eye on Twitter. Any interesting tweets out here that managed to come in and either save things or push us down on it here. So certainly, that China news here is going to be the big driver.
Definitely. So yeah, amazing how much can turn on a single tweet. Unfortunately, listeners, that music means that's all she wrote for this episode of the Option Block. Not all that she wrote for the network today, though, of course. No, we got crypto coming up a little bit later these days. It's coming up. It used to be 1:30, now it's at 2. So you get to take a little bit of a break, get a nice 1-hour sojourn. We'll be back at exactly 2 p.m. Central, streaming live. Spoiler alert, crypto, vol, and everything else is off a freaking cliff, or off the charts, I should say, today. Everything else is off a cliff. Crypto is off to the races. So we'll get to all that. Got some good guests in here coming in with some funky new gaming-oriented tokens, which is kind of interesting, and it correlates to trading. Don't worry, we'll check it all out in a little bit. Before we go, let's go back around the horn. That's exactly the way we came. You already heard from Uncle Mike. If you want to check out what he's got, if you want him to put that BBI to work for you, stcharleswealth.com is the place to go. Click there, sign up. You get an Option Pit gift card, so you literally cannot lose. Call them up, talk to them, get the gift card, and you head off to the races with some webinars and other fun stuff. And Mr. Meatball, if they want to put that webinar credit to good use, where should they go? What should they do? Maybe what should they pick? Do you have a favorite, sir?
A favorite credit?
Yeah, in your webinar archive, like a one you highly suggest.
You know what? I'm going to be actually you can go out, and if you want to learn how VIX works and all these VIX spikes, seriously, come in and check it out and listen to, go to our YouTube change, YouTube and search Option Pit VIX, and there is all kinds of stuff on how to trade VIX that we have. If you want to get more serious, we have a VIX page that's pretty darn good. So I would definitely come in and check it out.
On the YouTubes there. All right, there you go.
On the YouTubes,
there you go. Check it out. So you don't even need to use that credit for that. You can use that credit for something else. You can go to the YouTubes. Get it for free. YouTube.com. Search for Option Pit. Or Big Blonde here, whatever your preference is. And you can find some good stuff. And last but not least, Mr. Trey, if they're intrigued by what you guys are breaking down, maybe they want to kick the tires for themselves over there in the land of Fidelity, where should they go? What should they do?
Yeah, you can go to our website, check out fidelity.com/options. Great place to learn a little bit more about our options offering, our trading platform. You can also give us a call, myself, the rest of our strategy desk team. Happy to help you out over the phone, 877-907-4429. We can talk strategy with you right there, or point you out to some of the different classrooms and offerings that we make available here as well. Maybe get you into these charting and talk about how you can find some of these technical levels yourself.
There you go. Fidelity.com/options is the place to go for all that goodness. And on behalf of Mr. Trey, a.k.a. the last dad of Krypton, and Uncle Mike, and the Meatball, and of course myself, I want to thank all of you for downloading, streaming, subscribing. If you're listening live, go get a beverage, relax, maybe watch your portfolio a little bit. We'll be back in exactly an hour. Talk about the one bright spot in all of today's action. No, it's not Tyson Foods. That's the other one. Talking crypto. So we'll be back in exactly 59 minutes to do that. Otherwise, we'll see you back here on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.